Hi, this is Randy Finney with Right Side of the Chart, and today is Thursday, November 10th, 2016. Figured it'd be time to do another video update on the cannabis stocks. There's been a lot of interest in those, a lot of movement in the cannabis sector lately. I did state before the election that I was uh, suspicious of what I called a buy the rumor, sell the news event, meaning that a lot of these stocks have had just phenomenal run-ups into the elections, and the elections definitely went the way of the cannabis stocks. I put up the results yesterday with most of the states legalizing that had it on the ballot, legalizing either for recreational or medical use, and then we did have a sell the news. Rally on the rumor, sell the news effect yesterday. A lot of these stocks have corrected. I had mentioned about maybe waiting a couple days, a few days at least, to let the dust settle. But I want to point this out because there may be, if not longer-term trading ops, which there may certainly be here, there's going to be some short-term trading ops. And what I'm referring to are pullbacks to resistance. Trading 101. You take breakouts of support, breakouts of resistance or a chart pattern like this triangle pattern here. That's your long trigger, and then you have identify resistance levels that are likely to be price targets. And during a bullish trend, if you're bullish on these stocks longer term, as I am, and even if you're a short-term trader and you just want to game a bounce, traders, especially active traders, we make our money when there's volatility, and that means up or down. So you can get in if you're nimble enough. You can buy pullbacks to support. You can always put a stop below, minimize your losses if wrong, and try to game a bounce. For example, these aren't in any particular order. I had the list sorted earlier today by percentage losers. You can see the profit taken, by the way. This is my list of 29 cannabis stocks on my list. And as I posted yesterday, you would look just like today. You have stocks down as much as 50%, 40, 45, a lot of profit taking still going on in the sector. So if nothing else, one of the takeaways that I like to do on the site, not every video I make or every post I make is an idea to make money. One of the greatest investors of all time, I believe it was Warren Buffett, said, rule number one to investing, don't lose money. And rule number two was don't forget rule number one, something like that. So, hopefully, that if anybody got that warning, that there was a good chance, and the risk reward was definitely skewed to the downside, that these stocks may have gotten ahead of themselves, even overpricing in the most optimistic scenario. That certainly seems to have been the case so far. So hopefully some of you guys were able to book up profits, or at least maybe sidestep taking a long just in front of the elections, because in this case your stock's down another 52% today on top of where it was just the other day. So just in 2 days it's dropped almost 80%. And these suckers are tough to trade. I don't recommend standing limit orders. I like to trade these when you're in front of the computer, because a lot of these are penny stocks, and they can run right through your limit orders. But all right, I don't want to digress. Let's just go through the names quick. Keep this video short. I'm just going to identify levels. So here's this was certainly a pullback level here. You can see that previous reaction high, that acts as a natural support level there, and that's at about you can see in the pop-up box 0.0297, so call it 3 cents. That would be a round number there. And that one hit a low today of, if we can get the candlesticks on there, 3.1. I often talk about this, when I sell price targets, if 3 on the way up, if 0.030 was my price target, I wouldn't be selling there. I'd sell at 0.295 or just below, because sometimes these things reverse. Just like this, if a lot of people are watching that 3 cent level to buy, and as was the case so far today, they stepped in and bought early. So, and this may prove to be a dead cat bounce. They may go down more. So just to point out, next support level here, if I put pop-up box over here, you can see it. That's about 1.5 cents, 0.015. And then I really wouldn't want to see this one go much below that 0.0076. And again, I'm not going through these in order of my favorites or anything, just the ones I follow on the watch list. So that was MCOA, and a couple levels to look at there. And again, you can replicate this chart on your own, or if you're a member of the site, just ask me in the trading room and I'll be glad to put up a chart with list those price targets for you. AMMJ, this was another one of the favorites that we traded. Huge gains. This was a breakout down here, intersecting downtrend lines, which I love to see. Not one, but two support levels get taken out. And you zoom in, you can see how impulsive the buying was. You can see all these targets. These are lines. A lot of these lines have been added, well in advance of the stock breaking out or shortly after. Some of these were targets I had way back when. Some of the lines I've added more recently, but the point being, these stocks behave very well off the technicals. There's an uptrend line. You can see that uptrend line there, and created that back on November 8th, and you can see it broke down, and look what happens. This is what I try to talk about, how well the technicals, how these things trade to the technicals. This is the biggest candlestick, up or down, that we've had in this stock, really, maybe ever. Certainly in recent months or last year or so, anything you can see to the left of the chart. Now, is it coincidence that giant red candle came on a break of this well-defined uptrend line? I don't think so. It just goes to validate that trend line. So, for example, another way to spin this, if you were long in this stock, and you were afraid to be shaken out, you didn't want to get shaken out of the position because you thought it was going higher, but you were looking for somewhere to place your stop just in case things got ugly, that is your first objective stop loss. The next support, I'll even add it after the fact. There was a little gap there and a reaction high, so somewhere here around this level. But we burned through that. We sliced right through there. That was about 99 cents. And as you can see here, I can probably revise this target now. Let me move my watch list off here so we can get a better sight. Yeah, if I zoomed in, I would probably now, I see a reaction high there. I'd raise that. So here's your next support. And that's a pretty good one, around 66. Go long a little bit above 66. That is only a moderate support level, not very solid. But this is a very solid support level. This was one of my original price targets at 33 cents, when the stock was down here at 10 cents a share or 8 cents, wherever it was down here. That is a good level because it has more reactions. Typically, the more reactions on a level, the better it should act as support or resistance. So you can see the 33 cent level, in my opinion, would be if and when it gets there. It may not go down that far, but if it does, there's a good area to add. Now, I talk often about scaling in. These suckers move fast. They're volatile. Keep your position size small. I like to use a shotgun approach. That means spreading my money amongst numerous names, my favorites within the sector. And I also do that not just randomly. I do it strategically, meaning on pullbacks to support and or breaks above resistance. So this one I could see coming in as much as that 33 level. If it goes down below there, personally, I certainly wouldn't add below this level, and I would be very concerned to see the stock come back down below there. And I know that would be a heck of a correction. I'm not expecting it to get there, but I can tell you that, my scale-in plan, I'm not taking this one yet or adding to it. I believe I have this one among a lot of others as long-term holds. But I'd probably start warming up to that one around that 52 cent level, a little bit above there, possibly there. Again, if I dimple in, scale in, add a small fractional position there, add a little more there, add a little more there, but stop adding. And then ultimately, I don't know if I'd let it go that far on a stop. I say this, and I don't want to sound wishy-washy, but I don't trade any one stock in a vacuum. I'm watching the entire sector because there isn't a marijuana sector out there like the Dow Jones Marijuana Index, and to the best of my knowledge, not an ETF yet. And if there's not, I'm soon there will be very shortly. That I would follow too to kind of keep an eye on the sector. But you can also see here a divergent high on that one. So that one pretty much was a no-brainer not to chase it at this point. You had a divergent high, a buying climax, and now it's broken down below uptrend line support. And this selling could continue for a few more hours, a few days, or even a few weeks. Probably not much more than that, but we'll see. All right, let's continue through these quickly. Here's VAPE. Nice downtrend line. There was your breakout, and then it formed this uptrend line since. Now, this uptrend line only has a few tags back here, but it's certainly a potential pullback target. Now, I had a line right here at 9 cents a share. Yep, you can see that. This is a great example, too. I talk about this all the time. I use the term momentum overshoots. When a stock or an ETF, but typically a stock, is moving very fast. For example, this is a parabolic run. This is a parabolic curve right here, and you see that move. And in a parabolic run, it means the momentum is super strong, the stock's going up, and it overshot. So on VAPE, this would have been my final target at the time. I had a very nice resistance level here. It's a big thin zone above there. Longer term, I think once it gets back up into this level and takes out those previous highs, I don't see much until all the way up here around 40 cents, 39 or so. That's a big move. But right now, first things first. This one had a heck of a run just off the lows back in August. It's already come up, 2,150% or so right there. Okay, needs a little breather. A little too much, as I said. Yeah, great news. A lot of states passing medical or recreational, but does it justify a 2,500% run? These things didn't just sneak up on the ballot. They've been on the ballot all year. We all knew there was a possibility of that. So again, I think people just got a little ahead of themselves, as they often do, and the stocks got ahead of themselves. So to buy it back, and back to my point about momentum overshoots, you can see this very sharp sell-off. It overshot that 9-cent support level, but that doesn't mean, well, short it because 9 cents is gone, or get out if you have a stop loss order there. No, give it a little room when they have these momentum overshoots. Wait for a daily close. What happened on VAPE so far, you see this long tail here, that candlestick tail or wick? That means intraday it got there and it snapped back and trading is normalizing. Right now it's trading right on that 9-cent support level. So maybe that holds. And you can go long there if you want to start nibbling back in, or if you don't own any of this, maybe the stock powers back up. Maybe it ultimately goes on to get up into that thin zone. Or you have another support level here. So I think the safer play is a fractional, maybe a half position here. Another half if it comes down to this trend line. I do have horizontal support right, not too far below, which might make for a good stop if it takes out that level down there. And if you add a half position here, excuse me, and that proves to be the end of the pullback, then you can always add more, strategically. If the sector is shaping up and VAPE is shaping up, especially maybe if VAPE takes out that previous reaction high. In other words, better to play these safe. Don't go in too much. If you put a full position, too big a position, it's going to drive you crazy. You're not going to sleep at night. During the day, these big, 40, this thing's down, and it already snapped back off the lows, and it's still down 43%. So trading these, whatever you put in dollar terms, just say to yourself, am I comfortable if this thing drops 40 or 50% today? Do the math, on your position size and see what that'll do. And if you're not, and you still want to trade them, take that position size down a lot smaller, to the point where 42% might only be to you, whether it's a few $100, a few thousand, $40, $30, whatever your trading size is. Just keep in mind, this is what these guys swing, and this sucker could be up 40 or 50% tomorrow, or it could be down another 40 or 50. All right, ERBB, not one of my favorites. You see these funky candlesticks and the low price. This isn't 2 cents a share. That's 0.2 cents a share, 0.002, 2/10 of a penny. So you can see from the candlesticks, very thinly traded. If you like to buy those low price stocks, sure, there's a support level there. You can come in about 0.12 cents a share. It's already smashed through these other support levels. There's a downtrend line it broke out of. If it comes all the way back to revisit this trend line, I don't even want to spend a lot of time on that because it's not one of my favorites. Stay away from these really low price suckers. This one's only a penny a share. See these funky looking candles? That just means very thinly traded. And yeah, sure, the trading volume has been good lately because there was a frenzy. Everybody wanted to get in these. For whatever reason, people are starting to catch on to the big marijuana craze, and that creates volume. But let me tell you, I've traded penny stocks for years. When the momentum leaves and the momentum traders exit, that volume dries up, and what then you face at that time is a liquidity trap. You're not, this thing might be selling right now, bidding at 1 cent a share. You put a market order to sell. Most brokers won't even take a market order under, a penny stock. But you put a limit order, you're not going to fill it 0.009. They might not fill you down to 0.007, which is a 30% drop. Just between the bid and the ask. So be careful with these guys, especially when the volume dries up, because like I said, what the current last price is isn't the price you're necessarily going to get if you try to sell it. So stay away from the very, very low price, thinly traded ones. CBIS, 4 cents a share. I like this one. This had a beautiful chart. I've gone over it. All of these I've went over before. You can look at the old videos. Trend line breaks lead to these rips. It just trades so well off the charts. And it was a primary downtrend line with all these smaller sub-trend lines below. Broke out of there, bull flag, exploded up. But like I said, it's given up the ghost. in the last, down over 55% since it peaked out, and just since the elections in the last couple of days, it's down, 51% or so. But look at this. This is a beautiful support level. This is a level I already had here. That's at 3, you can see it right there, 0.0337, which is, if you look closely, and I don't have it exactly, it's right around the top of that gap. There's a gap here, so you could either target the top or the bottom of that gap. So that was an objective long today, and just from that bounce, if you're just a quick trader and you want to play bounces off these levels, there's an 18% gain since it tagged that gap today and bounced off the lows. I'm just measuring up the bottom of that wick. So that is an objective area to add some long exposure, and whether you're a bounce trader, you play the bounce, get out, and if you're a long-term trader, you position there and maybe leave a little room, take a half a position or so, because this one may want to come down to, if the selling gets really ugly, down to this 0.0252 level. And again, you want to step in and buy a little bit above the actual support level, since these stocks sometimes reverse just shy of support. If it goes much below there, I would not add to it. Something's wrong. This stock, based on everything I can see on the chart, should hold that level in a pullback. So you want to stop probably not too far below there. And if they run your stops, guys, remember, you can always get back in. If it comes all the way down for a full back test of the trend line and the charts firm up, I'll continue to keep these stocks on my radar for the foreseeable future. And, better to be stopped out and avoid a much bigger loss. Once in a while, that stop will just run your stops and the darn thing turns around and runs up. That's part of trading. So on this one, like I said, objective entry 1, objective entry 2, stop not too far below there. And then if that happens, we'll address this one at the time. MCIG, MSIG Corp, downtrend line break and run. Pull back to support. Okay, this is a level that I created back on. I've had this line here since October 17th, and that's about exactly where it came to. Now that was based off these reactions back here to the left. You can see. So there's logic behind these trend lines, these support lines. And there it is. So there's the reactions that you can see. So far, it held there. A quick trader could have played the bounce off there, or a long-term trader could have positioned long there. On this one, I don't see a whole lot. I could certainly add, and I'll do it now for you, one other what I call minor support level right around here. I see a reaction there and a couple reactions here, and that level's about, let's show you here, 7 cents a share. And then ultimately this stock had a very nice base down here. Again, it's hard to really tell how far this pullback in the cannabis sector will go, but again, the long-term picture, at least for many of these companies, is pretty darn bullish in my opinion. So I think it would be a gift to have this one come all the way back in to backtest this base. Don't know, oops, didn't mean to do that. Don't know if it'll get there, but if it did, that's where at that point I would be at a full position, not a full position compared to something like the QQQ, but as far as how much money I want to allocate to this one particular company, that would be maybe scale down to that position. And again, have plan B. If it never gets back to your deepest pullback target, start scaling in here. And if the sector starts to firm up, the first bullish event would be a breakout of these previous highs right here. And that one actually coincided with a couple reactions, and they're even to the left of this chart. All right, let's go through these a little faster now. GRNH, another one of my favorites, Green Grow Technologies. We traded it back here earlier in the year. Then we traded it again here on this breakout above this downtrend line and that 5 cent level. This one just exploded up. You can see the nice resistance. There were reactions here as well to the left of the chart, and that's exactly where it stopped. So another great example how these things trade to the technicals. Negative divergence. You see these red lines? Lower lows on the RSI and the PPO against higher highs. That put in a divergent high at resistance. That was a no-brainer if you still had any left in there to book up your profits, or definitely not step in and buy at that point. And from there, this thing dropped, if I can try to give a rough number here, 62%. But now we're at a pretty decent support. Well, we hit it today earlier. 6 cents a share. And again, these are all lines. If you look back months going back when I started covering these things earlier in the year, especially in the last round of trades that we did, I guess the videos would be back from August or so, August, maybe early September. These levels were shown as resistance levels and price targets then. resistance, once broken, becomes support. So these were all levels that were objective, pullback targets. I don't probably looking at this one. Yeah, well, that would be my bottom last target, the 5 cent level. If it pulls back to there, because that really defines the base. I know I'm spending a little more time on this one than I wanted to, but there's the basing pattern it broke out of. There was a couple pullbacks into there, but I'm looking at that 5 cent level as a solid, if it gets there, that would be probably the final pullback target I would expect, at which point I would have as much as I want to have in GRNH for the next leg up. And if it goes much below there, then my concern will be to scale out, meaning start stopping out. CNAB, this one was distorted by this long candlestick, but you had these two downtrend lines here, breaks, rallies. This one broke out to new highs. You can see it here if I put that line there, but it's failed since then. This is a very solid resistance or support level now. You can see the reaction high here. You have numerous reactions here. You had a reaction from above, reactions back here. And that level is at, let's really zoom in for you. The top of it comes in around 0.7980. I'll have to do it over here so it shows on the screen. 0.7980, so call that 80 cents. You want to step in and buy that one ideally. Start buying around 80 cents if it gets there. Keep in mind some of these may never get there. Some might smash through that level. I'm just giving you objective levels, and then you can see beyond that at 44.4442 levels, so call it 45 cents would be the next target. MJNA, another one of my favorites. I mean, I love these all. They're beautiful chart, the way they trade to the chart patterns and, the explosive moves. Here's the stock since the last breakout that was highlighted on the site. It's up 500% or went up 500%, and then it turned around and boom, there's the sell the news event down 70%. 0.92, so call it 9 cents. So far it's hit that level, had a little momentum overshoot and is holding it. Next support, I would actually move this line up at this point. Remember, some of these were previous targets, and now based on the price action since then, I would say that's at 0.0788, so call that 0.079. So maybe you want to step in around 80 cents, and then ultimately this is very solid support here around the 6 cents, 0.0604, so call that 0.06 cent level. And you can see there's a big old basing pattern in MJNA. So I think it would be a gift if it gets there to come back and buy at that 6 cent level for a long-term hold and a big move up, with stops not too far below. Again, might not get there, so have your plan B and plan C in order in case it doesn't. CVSI, these are all levels. Again, were put up on this one a long time ago. The last breakout highlighted was here, I believe, on this downtrend line. There was a bull flag pattern. That's just the flagpole measurement that shows this was the flagpole. You add that to the bottom of the bull flag, and that one played out roughly as expected, over a little bit higher, and has come back in, and each of these levels were supports. And you could see even, again, these were lines I've had here for a while. Look how it danced around that support level, bounced, but then didn't hold. So you could have gamed a bounce off there if you were quick, come back in, and this is, call it 0.3952, so call that 4 cent a share level. 0.04, and the low of the day was exactly that, 0.4000, yeah, exactly 4 cents. So like I said, these lines, I just drag them and it puts the numbers there. So to get them zeroed out, I have to click and then edit and go to exactly 4 cents. So you kind of got to round up and again buy a little bit above there. So there's one that bounced so far, hit support, one of the lower support levels, and my last and final level on this one would be this line here at 34 cents a share. See 0.034, very well defined. Looked like it came up several times. It acted as support, very good support back here. And then once that support broke, came up, tested. So that level has been validated about as good as it could be. And to me would be a gift on CVSI if it gets there to, scale down into or take a full position there. Again, if it gets that far, then it may. TRTC, this one just broke down from this rising wedge pattern. There was also a support line there, which it took out. I don't see a whole lot. Certainly some support here around 32.6, but the key level, the final pullback target here would be, if it gets there, a good buy point. That's at 27.49, so 27.5 cents. So call it 28 cents. You might want to step in, maybe even start stepping in around 29. I think would be a little safer. Don't want to try to eke out every last penny, and that would be a good area to go back into TRTC. You can see that wedge also had divergence, so this wasn't surprising. And I think just looking at this chart, I think that one has more downside to go. I wouldn't start scaling in just yet on that one. SGBY, there's another bearish rising wedge confirmed with divergence, which is not broken out yet. Sort of from eyeballing the wedge, looks like it might even want one more thrust up. Oh, grabbed the wrong line. See, it's at support, that 2 cent level is support. Maybe it needs to go up one more time, come back down, then break the wedge. Again, a lot of these are going to act depending on the sector, although there are some that can go up when the rest are going down and vice versa. But just these are levels to watch. So right now you have support around 2 cents a share, as well as that uptrend line, which is coming in right around there right now. There's your next support would be at, let's see, you have some reaction lows there about 0.0127, so call that 0.013. And then down here, if you get to the end of these levels, this would be my last buy point, and that is the 0.005 level, so half a cent a share on Signal Bay. CANN, General Cannabis, another one of my favorites, back from these two trades back here and here on these trend line breaks. Looked like a large flag pattern sort of playing out, but again, as mentioned, I was saying for the last couple of weeks, don't chase, and that flag didn't play out. It looks like a foiled bear flag pattern so far. It looked like a breakout with no follow through. There was resistance there around that 410 level. You can see from the previous reaction high over here. Right there's the previous reaction high, about, well, I guess 4.31 when I move it up there. Your pullback target, ideally, there is some minor support right here on that reaction low. Here's a reaction high and a reaction low more recently, and another reaction high. So minor support there is about 2.83, 2.84, with a pretty good buy area if you can get it down to $2. You can see the reaction high there, and yeah, that would be an ideal buy area there. It may go a little bit lower. You definitely don't want to see it get in below where all this trading went on around that 120 level. I would certainly, if it gets down there, something's wrong. EAPH, very low price, thinly traded one, but it just ripped once it took out this trend line, and this speaks to the gains in these low price, very low price one. There's almost 1,200% gain in just less than a month or so. That was my target zone. Well, it didn't blow through. It actually had a reaction there, sort of flagged and then continued on and hit that previous reaction high and almost stopped cold. So where to buy this one back if you like it would be right here. I got to go over here if you can see it. 0.0080 is the top of that target zone, the bottom of that target zone, which should also act as support. 0.007, so 007 on that one. And who knows if it comes in and stay away. It's thin. I probably shouldn't even spend so much time on it. Very low price, thin one. Again, so is this one, CCAN. I'll just not even talk on it. CBDS, Cannabis Sativa. There's an uptrend line and a downtrend line. This downtrend line comes in off the chart. You can see that from the left of the chart. I had to go to a 2-day period chart. So there's intersecting support. You have an uptrend line right here and a downtrend line. So in an ideal world, as far as objective entries go, and before I do that, also let me point out you have a divergent high. So this one may have some more downside to come, probably does. See the strong negative divergence down here. The RSI making equal highs and the PPO making a lower high while prices make a higher high. So the perfect or ideal scenario, I should say, for this one would be to come in down here and back test that downtrend line. There's also very nice price support. You can see a reactions here, probably some more to the left of the chart, even some reactions around that point. That comes in right around that downtrend line, and if that goes, if there's a little momentum overshoot, you also have this uptrend line. So here's one that I would scale in, just to start to scale in above this downtrend line, continue to scale into the uptrend line, and then not add to it at that point. You want to give it some room, that's fine. You can, there's several support levels here. I really wouldn't want to see all this go. This would be like the last straw support for that one. You might not even want to give it that much more room. If you don't, these are some other levels here you can look at, but I think this is your buy zone right here. Scale in, or go take a single position if you want to give it a little room, whatever you like to do. and that was CBDS, CGRW, Canna Grow Holdings. Nice trendline break. I think we caught that one earlier in the year and then took it again on this trendline break. I believe that's what that was. Huge run up since then. That's not even a flag. It's too big now to be a bull flag. I'll move that away. It just went parabolic and went to the moon, and this one's going to come in. So this is your buy zone right here, your ideal buy zone, I should say. This level here. You have a previous reaction high, which is a little bit above. I must have had that green line there for some reason. Let me go back 2 days. Yeah, I had that green line there for that reaction high back in early 2015. And that's, so this is really a zone. I'll call it a buy zone. I'll make that line green so you can see that's at 95 cents. So top line is at 10, almost, yeah, just over $1. And then what I say, 90, 95 or so. So from about $1 to 95, you have support on that one. That should hold on a pullback, would certainly offer an objective entry. And this would be the last straw support or add-on area around 0.72. ENRT, wouldn't touch this one right now. You can see the divergent high. I haven't drawn it all out. There's a negative divergence on it. Against this line here. So you had this rising wedge breakdown, and you have this other uptrend line which it's dancing on. Yes, that is support, but if that support goes, this one's probably coming in quite a bit, probably all the way down to that 2 cent level. There's also horizontal support above it, just below it. So I'll say that now. If you want to get in these guys and you really think there's going to be another big thrust up soon, which there could be, this could just be initial profit taking. You could certainly step in here. I have to say it is objective. A little bit risky. This one's a little bit thin. I keep grabbing the wrong color box. There we go. So you have double support there. And then, as I mentioned, there's a couple lines down below, that connect as support. But I wouldn't, if it went much below this line around that 2 cent level, I wouldn't chase it anymore, add to it. Again, not one of my favorites there. DEWM, another low price one. Pretty solid support level here. It's low priced. Again, not one of my favorite. Just keep your position really small in these low price suckers. It's speculative money, but that level has acted as support. We've only seen 2 brief fake outs and always snapped back up above that level. So this one looks to be basing long term, and you want to buy it on pullbacks to the support level with solid daily or maybe even 2-day or weekly closes below that level, that shaded area there. AERO, bearish rising wedge. This is the only one out of the whole sector that I shorted, and I closed it out just yesterday. I think, was it yesterday? Yeah, yesterday. It broke below here and came down. This was a target, this 348 level I was looking at. It broke that wedge. Could go more. It could break this wedge again. See these 2 uptrend lines. There was clear negative divergence, and that is certainly a level, that 348, if it gets there again. But I have a feeling it's going to come down here to 293. This is pretty solid support. This is where I would like to buy this guy back long. I did have it long before and sold. My target, if I remember right, was up here. I can't tell you for sure if this was my target or this was my target before. I really can't remember. Trading so many of these, but that's a decent support level. You can see all the reactions there, and then you can see all the reactions below. So this is the buy zone, the ideal buy zone, especially if it breaks below this level. Now it may not break below, so you want to watch it. If it can power on through, burn through these divergences, take out those highs, that's going to be bullish, especially if it does it while the majority of these other stocks are doing so. EDXC, pullback, there's support, there's your next support, and this is a final support shelf. It has no business breaking under there. If it gets there, you could certainly go long. There would be an objective long or a last area to scale into, and then you wouldn't want to see it go much below there, especially on a closing basis. CHUM, Chuma Holdings, very thin. It's got a big downtrend line ahead. That goes to the left of the chart. But I can tell you if and when, here, if you want to buy this one, if you're interested in it, you have a trend line here. I'll keep grabbing the wrong tool. You have a uptrend line here, which it's tried to crack below intraday, hasn't taken it out on a closing basis yet. Maybe you go long there. If it can get into here, there's a thin zone. It can run up and hit either this uptrend line or possibly this horizontal resistance line around 0.145. But again, not one of my favorite, but certainly, again, take a shotgun approach because you don't know which one of these stocks or which ones will be the big winners and the big losers. This full FULL, still basing. This is more of a financial company. It has something to do with the cannabis sector, probably funding startups. And again, I'm just watching this one for a breakover, a solid breakover, 275 on volume. So that one really hasn't triggered. Cara, as I mentioned, not a pure play. It's more of a biotech company. It's a core long-term holding for me, and it has taken out that 940 level now that I mentioned. You know, the biotech sector has been going crazy since the Trump win. I expressed my suspicions about that, but this one I like. And it's also, this is a tiny micro-cap company, and it doesn't march to the same drumbeat the rest of the biotechs do, so I'm not concerned really what XBI or IBB do. This one's too small to even, it flies under their radar. So so far that's, you know, bullish, and those are the, like I said, my longer term targets on that one. ATTBF, very thin. You can look at these funky candlesticks, ran up to resistance right there. I don't even want to give you any buyback targets on this one, but if I had to, we'll say 7, the 0.072 level looks like the next objective entry, or if it can break out, make a solid break above those recent highs, about 19 cents a share. Okay, looks like 3 or 4 more to go. TWWMJF. This one, like a lot of others, they also trade on the Canadian exchanges. I'm going over the U.S. symbols because I trade in the U.S. But if you look up a lot of these names and you trade in Canada or somewhere else, some of these are listed in other countries as well, other exchanges. You can trade the same stock under a different ticker. Breakout of a triangle, another triangle, breakouts, moved up. Broke down from this wedge, set up in this parallel. See this line parallel to that other uptrend line. So this one I'm watching. If it breaks under there, that would be bearish. So far, this one's powered up and made a new high today. So there's a, however, there's potential, not confirmed. You can see that PPO pointing up and the RSI pointing up. So that means they can keep going up and take out that divergence. So it's only potential divergence. But the fact this one's making, it's about the only one we've covered today that's trading at new highs, there might be something there. So there's one to watch. And you know, with all of these, if you want to take them and trail a stop, just set a stop, and you might get clipped on a few of them, and the rest might run. So that's always an idea. ACBFF, I made this clear many times, one of my favorites. And as far as the marijuana stocks go, this is a core holding too. It's an official trade on the site, has been and will be for a while, until at least I think I have a rolling target right now of $3, long-term target. It's healthy price action. See, I like this one a lot. I like the business model. I like it fundamentally. Check out their website. This company seems to be the real deal, and so far it's just holding its own compared to the rest of these. You're not seeing the huge pullbacks. This looks like a little just consolidation, digesting that recent huge run-up. We started buying that stock back here at 55 cents. We had 2 swing trades, both very profitable. Nailed the entries and exits on both of those, and the long-term trade started there as well at 55 cents, and we're up to $1.55. So doing well, and there's a minor downtrend line to watch. Like everything else, birds of a feather flock together, so you might need to see the sector as a whole start moving before ACBFF takes the next leg up. If you get it back down here, there's a gap back there that already proved as a good buy point once. There was a momentum overshoot there briefly. That little wick shot back up to close above their intraday. A gift would be a pullback to the $1 area. I mentioned before when we were under $1 that would be a bullish move once it got above there, and it did. Shortly after it broke and maintained the $1 level, they were upgraded to be listed on a better exchange, gave them more visibility. And so this one's, was a penny stock when we bought it, no longer a penny stock. Last one, APHQF, Alpha Inc. There was virtually no volume. It was very thinly traded, but this one's just been taking great volume recently. Potential divergence, but only that, potential, and it's not clean separation on the MACD. And the MACD is pointing up. This one is another one of the few making a new high right now. And if you want to trail it up, there's your trend line, pretty well defined. And you could trail it up with a stop. It's not too far off that trend line now. Buy it back on a pullback. And if things get ugly, if the sector continues to come under selling pressure, maybe it breaks under that trend line. And here's your first buy point right around 250 and then 225. You can see some pretty nice support levels there. And I'd like to see it hold that. If it doesn't hold that level, could get ugly. If it gets really ugly, you could, and you haven't stepped in, you could step in and buy here around the $1.40 level. That's, that was a breakout point for the stock back here, but we'll see. So those are what I'd look for now. Again, I don't expect that deep selling because, like I said, net, the results for the election were pretty positive. And again, my whole premise has been that these things just overpriced in, the most optimistic results. It still takes a while from these states to really get the ball rolling and these companies to start benefiting, financially from these things. So, but over time, I think you'll see more and more volume, more and more interest in these stocks. You'll see some of these bulletin board and pink sheet stocks get moved up, especially once they cross above that $1 level and maintain it. This one's at $3 and something a share. It was just recently a penny stock, and so I don't know whether this one's bulletin board, pink sheets, what. But what happens is they get moved up to a better exchange with more visibility. That also allows different institutions to come in and buy these things, and these stocks can go from in the sub $1 level. One day this could be a $20-$30 stock. That's not going to happen tomorrow, but that's why I like the potential right now for the sector. Okay, I'm going to wrap it up here. This is probably the longest video I've ever made, but I covered everything I wanted to. That's all 29 on my watch list. And as I said, if you guys have any that you like and follow that I don't already have on my list, please pass them along. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.